So never follow any method consistently. 44% of you said that we are moderately successful. 44% of the people said that we are moderately successful, and remaining you can say it is a great domain. So 56% of people have a bitter experience in intraday trade, and they say they are not successful. The reason is we never follow any method consistently. Consistently means today we are following technical MACD, tomorrow we will follow some other parameter, day after tomorrow next, day after tomorrow next, and after couple of months we will entirely drop all the methods and we will just follow the wildcard approach, put 5 point above stop loss, below stop loss, 5 point above target. That is what we used to trade, and our hunting never ends. So this is how we trade. So that is the reason why. And those who are the 44% segment they are coming, I am pretty sure those people will be definitely following some method. So I am going to introduce one method called volatility method. All of you I have already told earlier also. How this method works out, we used to take the volatility from the past 10 days data. We used to calculate the yearly volatility from past 10 days data. If it is less than 20%, we will apply Fibonacci retracement principle. If it is greater than 30%, below 50%, we can apply Gann price to price square, any of the Gann principle. Greater than 40, Elliott principle. Any gap up or gap down happens, we will start the calculations from the opening price. First we will judge the pricing from the previous day closing, but if there is a gap up or gap down beyond our estimation point, we will be changing it from the opening price. This is how we used to trade as per the volatility method. Enough literature you will find in our website based on this thing. I'll just straight away go to the parameter of the volatility, how we used to trade in this. So first, today my first view will go to the Bank Nifty, wherein slightly higher volatility is there. I'll also go to the Nifty. I'll also take some of the stock futures, and I'll take one or two equity segment stocks also. So I'll just 10 days data, I'll be calculating the volatility. Based on that, these are the methods I'll choose. So all these things I have just automatized here. I have just analyzed the future now. It is telling me currently I have a parameter, say volatility is 13%, and my future, Bank Nifty future, if I wish to purchase, I should purchase at 17,471, keeping a stop loss of 17,408. These are the targets for the day I am expecting. So where I am quoting now, 17,425 I am quoting. Today I have made a high of 520. From there I have slided, and I am now at 17,422. 422. So little bit, if I go for my volatility tool, wherein I will get some view about the probability estimate also. So this is also very important whenever you are doing intraday trade. So using one regressive method which is available in the binomial option pricing model, we have just devised one method by means of which you can able to estimate the volatility, means estimate the probability of up move and down move. Slightly it has changed because current price would have been changed by this time. So 422 was there, 416 has happened. So anyway, so this is couple of points difference it comes here. So once the current price, so each time the current price changes, volatility parameter will change. other things also will change. So now I am getting a very pretty interesting view here. Probability of falling down is 72%, probability of going up is 28%, and buying trade is 17,453. It is set, and it is recommending to sell at 17,394. Currently it is at 17,416. Confidently I can sell it with having a stop loss of 17,454. If it could be a 50-50 ratio, if it could be a different, then I must have not taken that position, but confidently I can. It is a 72% and 82%, a 28% of probability. So henceforth I am recommending a sell trade in the Bank Nifty, keeping a stop loss of 454. My initial target will be 377, 47, 327 and 299. If I am selling at the current price, then 394 will also act as a target for me. So I am close near to these things. So I am selling Bank Nifty without having any hedge, because Bank Nifty 456, 454 it has come. Imagine other case around. So breakout once it is given 394, you can sell. If you are selling at the current prices, then this is the 54 will be the stop loss. Imagine a other case around happen. Say this is the thing it has taken. Now you are at 48 level. Imagine you got a level of 54. 54 has come, breakout has given. So it is buy trade is giving. However, the probability of falling down is more. You are getting a breakout in the upper side direction. However, your probability is indicating you are having a greater chances to fall down. So you have given that it's a probability of falling down is more. However, you are getting a chance to buy, or 54 it has given you a breakout. At this situation, what to do? I repeat once again, probability of falling down is more and you are getting a chance to buy. So in this particular situation, you should suspect this price movement and try to hedge it. Means if you are buying at 17,453, then you must hedge it with, if it is buying here, you must hedge it with a put option, maybe 17,500 put option, nearest put option you can buy. Put option you can buy. So you try to hedge it with certain. So try to hedge it like this. So it will help you, means it will be the Nifty is at 8,379, 80 level now. So this is the thing we are getting, 91 and 65. Save it. Probability of falling down is more and probability of going up is less. If it is giving you the selling side breakout, confidently you can sell. However, if it is giving you the buying side breakout, then try to hedge. So the direction in which the probability is swinging, that is important for you. Now I'll go for the equity. Some of the stocks I can say. So let me take Infosys, Infi. So some only the front lines I will take. I will not take user specific stocks. So frontline stocks I will be taking. So it is for the equity, and 4,170 probability of falling down also 65%, going up is 35%. And if selling side triggers, no need to hedge anything, and if buying side triggers, then only we need to hedge it with certain options. So so many of you will say that hedging is a difficult task. Why should I involve the hedging in this particular thing? So there are, whether you accept this idea or not, but if you want to improve your trade success in intraday, then little bit you have to educate yourself, and follow this moderate hedging policy. So that will be highly required. So this will be highly required. So this will be highly required whenever so this will be highly required for all are getting by technique. So option arbitrage trading technique. So we have taken a view of 17,500 call option. So let me move to a arbitrage opportunity. So if there is any arbitrage opportunity, we can utilize this. So any arbitrage opportunity, we have taken the reference of 17,500 call option. So 17,500 call option we have taken. So 17,500, 600 and 700, and downside I am taking for 17,400 and 17,300. This is a arbitrage trade. We'll be just identifying for this. So once you analyze this particular thing, you are getting what will be the fair value of these options. So currently at 250 reference you have taken, 54 it has become. So 4 rupees or 3 rupees it has 250, almost 250 level it is trading. So 17,600 call option, which is 204 is the value. It is almost at a fair value. 17,700, 164, it is also almost at a fair value. 17,400, which was supposed to trade at 304, is at 55. So 304.55, it is at 192. So 11 rupees of less value. 11 rupees of less value is present in 17,400. 17,400 having a arbitrage value of minus 11. So if I will be taking at 304 as a reference and considering 292, 293 I am getting. So if I am getting 17,300, 41.52, say 45 if you are getting a deal also. So 345 you are getting, so 15 points of arbitrage value. So if I take this particular things into account, very successfully Bank Nifty has given the target. Bank Nifty intraday sell what you have initiated has successfully given the second target level. Target level of second it has come as per our estimate what we have taken. Probabilistic estimate proved successful in this, and so I'll be just loading this data once more, and since the value points has changed, analyze future, and I'll be going for this is 17,500. So very successfully downside entry of the Bank Nifty it has given you, and it has also penetrated your second target. For downside you have not hedged. So since this options value has changed from 245 level, it has come 17,500 call option. So 245 reference once it has come. So from there I am just taking it. So now arbitrage values also you will find out. 37 to 57, same it makes around. So here 10 to 15 point, 17,400 also 10 to 11 point lesser value. However, 17,600, 17,700 almost at the fair value it is there, 17,600, 700, because it is being taken with a reference of 245, but you are at a 228 now. So once you are finding out this kind of things, so what the trade I'll do? So I'll be buying 17,300 call option, one lot, and I'll be selling, say if I am not taking this anything, I'll be selling 17,500 call option, one lot. My profitability will be this 15 point of, so say 33, for say 40 to 56, this 15 or 16 point of arbitrage value which is inducted in this 17,300, that I want. So that money I want. So for that reason only I can take it, and this 15 point of the profit will come at which level? Once my once my bank nifty goes to my target 3 or target 4 of the upper side, because I am involving in the call options only. Similar way you can find out the arbitrage opportunity in the put option, and you can do also. So this is a less damaging, good success arbitrage option trading technique. So less damaging and very good here. So probability of the, though you are close near to that buying entry price of the bank nifty, but that probability indicator was saying that there is a 70% chances that this trend is not going to sustain, you are going to fall. It has happened in front of your eyes. Nifty, you have seen these things. Probability parameter said that you are going to fall. It has happened in front of your eyes. So 9:30 we have started, and by this time we have achieved that things. Maybe, and this is one of the experience Mr. Ram is sharing. So he's used it also in the crude oil, which he's saying that he's one of the, he experienced the most successfully in this. So here the technique is not hidden. The software, maybe it is used the same technique in a different way, different projections, different views we have taken, different analytical, but the core of that software, the calculate the volatility, then move into the Fibonacci Gann or Elliott principle, then project a level, that has not changed. The probability of falling down and probability of going up, this is also an advanced feature of our software, which we never disclose because of our commercial compulsions. However, you have seen in front of your eyes, when this bank nifty was 17,425.30, it was quoting, even though it has touched 50. That time also your probability parameter saying that 70% chances there you are going to fall. So you are just 4 points away from your buy entry price. But that time I discouraged you, let it cross over. Even though if you are buying, you try to hedge it. I discourage you for buying, saying that even though if you are buying, try to hedge it. And just within half an hour, you saw the result here. So these things never lie in front of you. This is a mathematical principle. This principle of mathematics never gives you any false promises or false breakouts here. Technical also works in the same way, but you have to trust on the technical, you have to trust on the chart, you have to trust in many aspects. So I have also told you, so if you are getting a probability estimate differently, it won't be different. The software what you are using, same software I am using. So you must you have not updated the tool. If you have not updated, try to update it today. So I have demonstrated two tool things in front of you, and this is come true to you. Now I will moving to you at a pair trade, one of the most successful trading technique. But before that, I just wish to know whether you know about the pair trade, whether any of you are using the pair trade. So give me some answer. So intraday trade you have seen. Now to do. So we have recommended buying of this particular, in this pair of SBI and ICICI, buying of SBI one lot and selling of ICICI one lot based on the analysis of correlation and other things. So what they used to do, many of the people, those who are following the pair trade, what they will say do here, simply they will watch it as ICICI Bank is 0.81% down, this is 0.5% down, so ICICI has fallen more, so buy it, sell this thing. That is one of the wrong trade many of the traders used to do. Second category of the trader, they used to say that ratio. So ratio they used to take, means ICICI Bank divided by SBI Bank. So this is one X ratio you will get. Past 30 days, 60 days they will take it. They will say that yes, maximum this ratio has gone to this point, minimum this ratio has come down to this point. So currently is this one, it will go to maximum this. Currently this one at X, so they will divide the X and Y prices. They will get one max X maximum ratio, they will get one minimum ratio, and they will be having the current ratio. So they will compare, we are current to maximum, if you are going, we will make this much of profit or loss. Current to minimum, if you are coming, we will be getting this much of profit and loss. This is also a wrong parameter. How come this ratio, which is going to be having no scientific validation behind it, is going to prove to be a successful method? So Johnson's alpha, Sharpe ratio, Trainer ratio, it is being used to evaluate the performance of any mutual fund. This is being well tested from the 1975 onwards. It is not being innovated now. Why cannot that same concept being used here for our profitable trade? So this pair trade analysis, what you are getting from our smart finance domain, it is taking these parameters: Johnson's alpha, Sharpe ratio, Trainer ratio, beta decoupling, correlation. Spread also we are taking same price ratio what you have seen. We are treating that price ratio in a different way. So this is spread also we are taking, but spread is one of that 5-6 analysis. Spread is not alone going to decide on any trade. So if all parameters are giving you a green signal, better to enter to that trade. So that is how the pair trade spans out. So this is what you have learned on the pair trade. So let me move to the
smart finance. If you have any specific query regarding, these are the products which are being developed by using our own experiments and innovations of Mr. Ranjan. For last 10 years, what work we have done in these concepts, even in the technical analysis, what experiment Mr. Ranjan has done and what innovation he has brought into that course, how mathematically he has proven that existing technical analysis course. Same is true with the Elliott wave course. Those things we have mentioned in the book. With the examples from Indian market, frontline stock examples, we have explained these concepts in the words of Mr. Ranjan in his own voice in the studio. You will be getting those studio recorded lectures available in the DVDs. And the concepts taught by him are being programmed in the form of softwares. Today particularly we have seen a very successful intraday prediction, that is the Bank Nifty intraday prediction, what he has shown you, that is available using the tool of volatility he has shown you, that is available in the form of a volatility software. This is the tool that is available at the cost of 4,000 rupees with a validity of 1 year. The concept what he has taught at the beginning, 10 days volatility, calculating yearly annual volatility, then the segregation as per the volatility concept, whether Gann or Fibonacci volatility, all those things. Those are very much programmed already there in the software. The buyer or the user has to do nothing other than to select the stock code or commodity code. I must make a give you the information here. This tool is very well applicable for currency market as well as commodity market as well as capital market. So you yourself have experienced it today in the live market hour, how wonderfully it works. We have given you the Bank Nifty intraday price forecasting using the tool, and how second target it has achieved, that also you have experienced. So nothing goes beyond our own experience. Right. Next is, we have also seen a pair trade also, that is available in the product of future and option course plus pair trade software. That again costs you 7,000 rupees with 3 DVDs and 1 book, and 1 pair trade software will come in this. These concepts we also have taken exactly 1 month back through webinars. As you know, Mr. Ranjan is the only entrepreneur, innovator in the financial market who avails himself in the public domain time and again, that too in the live market hour. He demonstrates his techniques boldly and transparently in the live market hour, and you are very well experiencing how successful the technique is. So on 10th of last month, October, we have done another one session of this webinar. Those who have attended, please let me know whether any of those people are still attending today. They will agree with me if I tell the result of that day. That day, Mr. Ranjan has forecasted using his volatility technique 2 intraday trades. One is the Nifty intraday level, another is the Bank Nifty intraday level. And they must stand by me, those who have attended last time. Both the predictions remained 100% successful. That day itself, during the session of 1 hour itself, the targets were achieved. Also, he has given a pair trade prediction that day, that is SBI and ICICI Bank. Hope you all remember, those who have attended last webinar. That also remained successful the same day, pair trade. Yes, Mr. Mohammad Mansoor is agreed with me. Yes, Mr. Ankit Saraf. Yes, Mr. Ashish Mukherjee, thankful to you for your opinion. And also, that was the webinar experiment what we have done in front of you. On 28th of October last month, Mr. Ranjan has given an option strategy in the Google's group. In our Google's group, if you want, you can also join that group free of cost, available in our website. He has given a strategy, and the detail of the strategy, why he is telling to buy something and why he is telling to sell something, that he has mailed to all our people. 28th of October, we have given the strategy, which was on Bank Nifty option strategy. 31st October, 18,000 profit at the time of 11 o'clock in the morning. Google group, if now also you can revisit and check my statement, you will agree with me how true am I. So, and how the technique he has, what he has followed, that also transparently he has mentioned in that message itself, why he has forecasted such and such thing. The reason of telling you all this is, we are having something called concrete truth. Now we invite you all to stop losing money, and please do follow this and make money and make profit. Not to spend money, not to worry also. We have a lot of stuff. 90% of Mr. Ranjan's innovations are available in our website free of cost in the form of videos, articles, repeated free webinars where you are getting the wonderful opportunity to listen him directly. You are able to ask him your questions directly. He is kind enough to attend your questions every time. This is the F&O Wizard Google group I am showing you. 28th of October, as you can see, we have given this prediction. Mr. Amit has given some 17,000 profit, it has shown. He has given an opinion here. Right. Now, those who want to spend money and take Mr. Ranjan's product for a greater benefit, for them this is the announcement I am going to do today. All our products, total 9 varieties of products. Many of opinions have come here in the screen. Mr. Rames, yes, I agree, it was successful and amazing. Mr. Vishwajit Das. Right, Mr. Ranjan will take forward these answers for later on. Let me go to the product again. Total 9 varieties of products we are availing. So that comes in the full package where it gives you 18 DVDs, 6 printed books, all our softwares, including option strategy builder, including pair trade, including integrated tool, including volatility, everything. So when you buy separately, that costs you around 40,000 rupees. Now it is at the cost of 54% discount, which costs you 17,500 rupees. 17,500 rupees includes for all. And also during Deepavali we have given a wonderful offer for the full package buyer. So many small traders have approached us, why nothing for us, only for the big players. So Mr. Ranjan has given another announcement for the small traders. We have two products called volatility and GAN. These two paid products, which are available each at a cost of 4,000 and 8,000 rupees. Now you can avail these two together at the cost of 5,000 only. I repeat, GAN course and volatility course together instead of 8,000 can be bought at the cost of 5,000 only. Offer is valid for 3 days, today, tomorrow and day after. That is today is 10th, 11th and 12th of November. By 12th November 5 PM you can avail this offer very well. That will give you book on GAN, 3 DVDs on GAN and one very much real-time software on GAN concept. Plus in volatility you will be getting user manual as well as one ebook on volatility concept plus the volatility software. These are the real-time softwares. Up to 1 year it will be valid and can be availed only at a cost of 5,000 rupees. Any further query on the product, please put in the chat box. Those who have already bought the products, Mr. Shankar P, you will be getting all the updates throughout the year. So not to worry. You keep on updating the things and you will be getting the updated. After 1 year, what is the price? Mr. Ashish Sharaf is asking.
To this, 46% new to this particular option strategy based on this survey, 31% difficult to implement, 11% people are successful, 9% are failure. So successful people are more. That is quite interesting. So here, many simplest way you can learn this. Just to see, this is the strategy I was talking about. This is the strategy I have given on the November 7th in the Google forum. You can get the timing also, what time it is being given. And this strategy also being taken by me. This is being taken by me. Same order, one lot. It is not for the sake of profit, rather to know whether my estimates and my tricks works or not. For that reason only, I used to take this particular strategy. Just to know whether how true is my own view is this, how it is going to impact on me. And many used to ask me whether you are giving me a very big and this strategy is consuming a huge money. So I can say you that how much means money it has produced. Just a little money I have kept in one account just to initiate the trade, to experience my own trade, own analysis. So people may comment that yes, you are taking a position which is consuming huge money. People may say that yes, you may not be true and you are not taking these things. So you can say this entire strategy, only one strategy I have, no other strategy. This entire strategy has taken 13,093 margin. And another 15,000 maybe I would have spent on the options. It is so 8, so 28 to 30,000 rupees you can able to spend for one strategy where the trade is managed, where you know when you are going to get the profit, at what level you are going to get the profit, you know how much going to get the losses if the losses comes. So I am just going to focus on a parameter wherein the 31% of people who said that we are finding difficult to implement, and some people say that we are new to this. I request you, all the traders, those who are present today in this event, please spend some time, learn and adopt the option strategy techniques. Once you adopt it, you will enjoy the trade. You will enjoy the trade and you will definitely make some good profit in the trade. You can have the courage to take the big ticket trades. Same for pair trades also. Intraday trades, if you are analysis is good, concept we are following consistently, we can also make profit, but they are taking a huge leverage of few crores per day is not at all advisable. So fine. So I'll just move into the option strategy. This is the option strategy tool for the Nifty. So you need to remember 2-3 things. Understand the option Greeks. What is delta? For each 1% change in the price, future price, how much percentage changes is going to come in the option premium? That is called your delta. Vega, for each 1% change in the volatility, how much changes is going to come in the option premium? That is Vega. Theta, for each 1 day you are nearing to the expiry, how much money you are going to lose from the time value in terms of percentage? That is your Vega. So delta, theta, vega, these parameters have a very simple definition. Now question is, I want to form a strategy that time value theta means theta decay should not come. So I have to bring a theta to 0. For each 1% change in the Nifty or Bank Nifty, I should not be worried because my strategy should not give me the losses. So I have to bring it to delta 0. For each 1% change in the volatility should not affect me. So I have to derive a strategy with a vega 0. Suppose somebody is saying that Bank Nifty looks bullish because after this thing it is consecutively crossing all the resistances and closing in the higher and higher level. So I am thinking that okay, Bank Nifty is in a bullish trend now, rising trend now, bullish trend now. I have some estimate for this, but I do not know where it will go. So at this particular time, having some positive delta along with the future short, if I have participated in the rally, same time I managed my risk. I am a positive delta, means delta plus 1, plus 2, plus 3, some way I have kept it, and same time I am selling one lot. So what happens? Multiple call option I am adding, so it is giving me positive delta. So positive delta I am anticipating means I am anticipating in a rally, in a up move, but I am controlled, I am confined, I am protected with my future. If this rally comes true, then I will make money. If rally comes true, then I will not make money, I will come out from this. So that is how you should initiate the trade. So like this you can see this particular strategy what I have given on November. What I have told you, sell this 17,300 call option 3 lots, 17,500, 11 lots you buy. Next strategy having a 0.95 delta. Means we are at a plus 1 delta. We are participating in a rally, but we are confined, we are controlled. So by this process of 11 lots, I am 790 plus 79. So I am adding 767 point I am adding in the delta, and 2 to 660 rupees I am taking from the market. So I am just 901. So 109 point of risk I am taking, but let me see how much profit I make. If I am losing, I am going to lose maximum 109. If I am gaining, my gain is unlimited. So this is a controlled participation in a rally. Same way controlled participation in a fall. So all these things is known as your option strategy. So this is already one open strategy is there for you. So now Bank Nifty has gone up. It has come to one level. You can say it has come down to 117,544. On 5th November it made a high, and 7 means it has also made a 13th October it has made a low, which is 15,000 something, 15,000 some 500 level to 17,545. So this rally has already contributed 2,000 points. Beyond this, if we are moving, we can move to, as per volatility, we can move to 17,000, 18,000 plus. If it doesn't move, then we can consolidate in this level or little retrace back little retrace back, and then again start our journey. So by this process, I am saying that you can have a delta 0. So be neutral at this point of time. Be neutral at this point of time. Have a delta 0. So how you can make it? Suppose same view I am going for Nifty. So I am just going for the Nifty. Same view. I want a delta 0. I want a delta 0. So Nifty already moved from 7,700 level to 18,363. Say I am buying this lift. I am buying one lot. So buying means I have future having a delta 1. So I need to reduce this delta to 0. I bought a future means it is having a delta 1. So now I will go for a grid scanner here. I will hunt for the option which is having a delta say 25. So here 8,250 is quoting at 50. It is having a delta 0.25. So similarly I have here 8,300 quoting at 65. 3. So by this process, what I will be doing here, I have done a Greek scanner. I have just taken a put option, say 8,300, and I am buying 3 lots because I saw it is some 3.33. So 3 lots. So say I am holding for 5 days. So calculate. So this is telling me that if further up move continues, then I will be break even at 8,500. So no profit, no loss, I will come out if it is moving up. But beyond that, if it is goes, I will be going on adding the profit. So I participated in a rally in a controlled way. However, if the same thing, if it is started falling 3,000, so now I will be break even almost at 8,200 level. Below 8,200 level, I am started making the profit. I am going to start making the profit. So now this is the levels as per the volatility we are expecting in the coming 5 days. If one level is crossed, then next is expected, next is expected, next is expected. But this is not the actual trend. So let me identify the trend. For every cycle in this particular month, how much we are expecting? We are expecting till 8,494 upward. We are expecting 8,157. At this point also I will be at some profit. At this point also I will be having a little loss. Weekly basis we are expecting till 8,438 or 8,243. At this point 2 points weekly basis, if we are consolidating in this particular band, our losses will be losses and profits will be this. So this is as per the Elliott's cycle. We have identified each and every bit. So it is simplified, very simple to use the strategy, provided you should know what is the delta, what is the vega, what is the theta at that particular time, and based on your projection. Because now if you say that shall we have a vega neutral strategy, I will say no, because vega volatility is almost low. Volatility of Nifty is already 12 and 13. So you don't expect the volatility to fall to 0. If the volatility is at 40, 45, that time we will not think about delta, we will think about the volatility. It is very high, it is maybe coming to 0. So we will be neutralizing the men's volatility. Some people are expecting that no, we will be time value, always we will neutralize the time value. So time value is a definite component which is going to decay at the end of the month. So we are going to, so we have to derive a theta neutral. So theta neutral also good. So based on your objective, your risk appetite, based on your own thought process, you can initiate the strategy. So strategy is very easy to implement, provided you should have some open mind to learn. If you do not learn, then it is very difficult to implement. So suppose if you are following a calendar spread. Calendar spread means this month you will be buying, next month you will be selling. So I am going for index future. So here, and some of the so say Nifty, imagine we are at 8,000. Many are saying that okay, 8,500 will be closing this month. So this month we will be closing at 8,500. So I will be going for 8,500. This month, current month, I will sell, and number of lot is 1. So I will be buying one call option of next month 8,500. So at 105. So say I am holding for 5 days. Let me calculate. So this is one, calculate. So this is a see, I have bought 100 rupees, I have spent here 32 rupees, I got it. Calendar spread I have formed. So for each movement, if it goes to By month end, if I am successfully closing at 8,500 level, I will be making a profit of 1,100. If by month end or next 5 days I have the line, if I am coming down to 8,100 level, I will be having a loss of 1,800. So this kind of strategies also you can form for any kind of need. So this particular software what I have shown you. So in my book I have authored some 23 option strategy for Indian market. So all these option strategies are being programmed here. You can save and compare. You can form a strategy here, save that strategy, and the next day you can again form that same strategy and compare it along with this thing. So this feature also there. You can manually also form option strategy by manually inputting all these values, calculating net Greek and all, with lot size, premium, volatility, everything you have to input here. You can give that implied volatility, how much volatility you want it to increase or how much it is to decrease. That feature also there. All my 23 option strategies what I have given. So that 23 option strategies also programmed here. So all these things come in this particular software. So this is about this option strategy software. I have shown you on option strategy software. So option strategy and this particular option strategy for buying Bank Nifty along with its 17,000 put option with a delta 0, it is still open. So I do not want to give you a new strategy. Better you stick to the same strategy. Buying some 4 lots of 17,000 put option along with a future buy. Stick to this strategy for 4 to 5 days. Book the loss once it is coming to 17,900 level. Book the profit once it is falling down to 17,000 below level. So this is how you should initiate in this strategy. All in all, this strategy, buying a Bank Nifty future along with 17,000 put option 4 lots. So with this, I will be ending today's session. Hope you have enjoyed this.